Hello and welcome to Calmvestor podcast. I am Ethan. Join me on this journey to build solid financial thinking and take control of your financial future. Today, we are diving into a powerful emotion that can wreak havoc on your investment portfolio, FOMO, or the fear of missing out. It is a feeling many of us know all too well. Imagine a stock, let us call it XYZ, or a new cryptocurrency that suddenly everyone is talking about. Friends are sharing their exciting gains, and news headlines are hyping it as the next big thing. You see it shoot up, and a voice inside screams, "I need to buy now or I will miss out forever." So you jump in, often near the peak, only to see it tumble shortly after. Sound familiar? Have you ever felt that racing pulse, that urgent need to buy an asset because you fear missing a once-in-a-lifetime opportunity that everyone seems to be capitalizing on? If so, you are not alone. FOMO is a deeply human emotion. Even seasoned investors can experience it. It is important to acknowledge this before we can tackle it. So what exactly is FOMO in the context of investing? It is that social fear that others are having rewarding experiences or gaining benefits that you are not. In investment terms, it is the dread of missing out on huge profits from a hot stock, cryptocurrency, or any trending asset. This fear often leads to rushed, poorly considered decisions. Common signs include constantly checking price charts in social media. You might find yourself buying into trends without doing your own analysis, just following the crowd. You might feel restless or agitated when you see others posting their gains while you are on the sidelines. Your buy or sell decisions become driven more by fear or excitement than by logic. Remember, FOMO is not just about money. It is also about the feeling of being left behind, of not keeping up with your peers or with what society seems to value. Letting FOMO dictate your investment choices can have serious negative consequences. You might end up buying risky assets at inflated prices or assets that do not align with your personal strategy. This often leads to financial losses, as buying at the peak and selling in panic during a dip is a common outcome. The constant market watching and fear can also cause significant stress and anxiety. More insidiously, FOMO can derail your long-term financial plans. It tempts you to abandon your carefully considered strategy for short-term, high-risk gambles. After a few losses fueled by FOMO, it is easy to lose faith in your own judgment and even in the market itself. Some people get so discouraged they abandon investing altogether. Why does FOMO have such a strong grip on us? One reason is herd mentality. As humans, we have an instinct to follow the crowd because it feels safer and offers social acceptance. Social comparison is another major factor, especially with social media. Constantly seeing others flaunt their successes, real or exaggerated, triggers a feeling that we are missing out. The allure of get-rich-quick stories, often amplified online, creates unrealistic expectations. It makes people believe that massive returns can be achieved with little effort or risk. Market uncertainty also plays a role. When you lack knowledge or experience, you are more susceptible to the influence of online gurus or unverified rumors. And then there is the fear of regret. We worry that we will look back and kick ourselves for not taking action when we had the chance, even if the chance was ill-advised. So how can we combat this powerful emotion? The first strategy is to build a solid foundation through a clear investment plan and sound knowledge. Start by defining your personal financial goals, both short-term and long-term. Understand your risk tolerance. What level of risk are you truly comfortable with? Crucially, research and only invest in what you understand. This is often called your circle of competence. Do not venture into complex investments without proper knowledge. Develop a specific asset allocation plan that aligns with your goals and risk profile, and stick to it. Continually educate yourself about finance, but be selective about your information sources. The second strategy is to cultivate mental discipline and independent thinking. This is your mental muscle against the pull of the crowd. Establish clear buy and sell rules for your investments, such as entry points, target prices, and stop-loss orders. And most importantly, adhere to these rules strictly. Avoid the temptation to constantly check prices. This can fuel anxiety and impulsive actions. Instead, dedicate specific, limited times for reviewing your portfolio. Learn to say no to opportunities that do not fit your plan, exceed your understanding, or breach your risk comfort level. You do not have to catch every wave. Accept that you cannot seize every single opportunity. There will always be investments that skyrocket without you. That is perfectly normal and okay. As Warren Buffett wisely said, be fearful when others are greedy, and greedy when others are fearful. This often means going against the prevailing FOMO sentiment. The third strategy is to create a FOMO-resistant environment. Actively manage your information intake and the triggers that ignite that fear. Limit your exposure to hot tip groups, forums filled with excessive profit boasting, and unreliable news sources. These can be breeding grounds for FOMO. Consider unfollowing social media accounts that primarily focus on showcasing extravagant wealth. These often present an unrealistic and curated picture. Instead, seek out investment communities that emphasize genuine knowledge sharing and practical experience. Look for substance over hype. Practicing mindfulness can also be very beneficial. It helps you recognize the feeling of FOMO when it arises, allowing you to observe it without letting it control your actions. To sum up, FOMO is a common psychological challenge in investing, but it is one you can absolutely overcome with awareness, knowledge, and discipline. Remember, investing is a marathon, not a sprint. Sustainable success comes from patience and a clear strategy, not from chasing every fleeting hot opportunity. The key message is this: strive to be a proactive, informed investor who makes decisions based on independent analysis and long-term value, rather than being swayed by market noise or fleeting emotions. As Benjamin Franklin said, an investment in knowledge pays the best interest. Arming yourself with understanding is your best defense against FOMO. So here is a call to action for you. Today, take some time to review your recent investment decisions. Can you spot any instances where FOMO might have influenced you? Begin building your FOMO immunity system using the strategies we have discussed. Start by clarifying your financial goals and your personal investment strategy. Imagine yourself confidently making investment decisions based on your own thorough analysis, remaining calm amidst market volatility, and steadily watching your assets grow over time. That is the reward of mastering FOMO. It not only protects your wealth, but also brings peace of mind, guiding you firmly towards your financial freedom. Thanks for listening. If you found this content valuable, do not forget to hit like and subscribe to the channel. See you in the next episode. Have an amazing day filled with positive energy.